Ever wondered how money makes the world go round? Welcome to our journey into the fascinating realm of finance, where we'll unravel the mysteries of money and its powerful influence. Understanding financial concepts is more than just knowing how to count your coins. It's about comprehending how these concepts shape our everyday life and the world at large. From the individual decisions we make to the global economy, finance plays a pivotal role. Today we delve into the world of finance and break down its complexities. So, what exactly is finance? You might have asked yourself this question once or twice. Well, let's unravel this mystery together. Finance, in its broadest sense, is the science of managing money. It's all about how we allocate resources, particularly money, over time. But finance is not just about money, it's also about risk and uncertainty. Now, finance can be broken down into two main types: corporate finance and personal finance. Let's take a quick look at each of them. Firstly, corporate finance. This is the realm of finance that deals with how companies make decisions about investments, funding, and dividends. It's about how companies acquire and use their funds, and how they manage risk to ensure profitability. When a firm decides to invest in a new project or pay dividends to its shareholders, it's all corporate finance at work. On the other hand, personal finance is about how individuals or families manage their money. It involves decisions on saving, investing, and spending, with an eye towards future financial security. When you decide how much to put into your savings account each month, or when you're trying to figure out how to pay for your child's college education, you're dealing with personal finance. In essence, finance plays a crucial role in both businesses and personal lives. For businesses, finance helps to make strategic decisions and drive growth. For individuals, it involves making decisions that will affect your financial future and your quality of life. Finance is more than just number crunching. It's about making informed decisions that can have a significant impact on your life or your business. It's the tool we use to navigate through the complex world of money, investments, and risk. So as you see, finance is all around us. It's in the paycheck you receive, it's in the bills you pay, it's in the savings you accumulate, and it's in the investments you make. Now that we know what finance is, let's delve deeper into its mechanisms. So buckle up as we take a fascinating journey into the world of finance. Scene script. Have you ever thought about making your money work for you? Let's take a moment to delve into the concept of investment. Think of investment as planting a seed. You put something into the ground, allow it time, and with the right conditions, it grows into a flourishing plant. Similarly, when you invest, you're putting your money into an asset with the hope that it will grow over time. Now you might wonder why you should let your hard-earned money out of your sight. Well, the answer is simple: to accumulate wealth. By investing, you're not just storing your money, but you're giving it a chance to multiply. This is the magic of investing. It allows your money to build upon itself, creating a cycle of growth that can lead to significant wealth accumulation. There are various avenues where you can invest your money. Stocks, for instance, represent a share in the ownership of a company. When the company does well, so do you. You benefit from the company's success in the form of dividends and rising share prices. Bonds, on the other hand, are a bit like an IOU. When you buy a bond, you're essentially lending your money to an entity, like a government or a corporation. In return, they promise to pay you back with interest after a certain period. And then there's real estate. Buying property isn't just about having a roof over your head, it's an investment that can provide a steady stream of income in the form of rent, or appreciate in value over time, resulting in a profitable sale in the future. These are just a few examples of the myriad ways you can invest your money. Each comes with its own set of risks and rewards, and it's crucial to understand these before diving in. After all, investing isn't just about making your money work for you, it's also about making informed decisions. Investing is key to financial growth, but how does one decide where to invest? That's a question we're going to explore in our next section, so stay tuned. Ever wondered why some investments make more money than others? Well, it all comes down to two fundamental concepts: risk and return. In the world of finance, risk refers to the potential that your investment will not perform as expected, or that you might lose some or even all of your initial investment. Return, on the other hand, is the gain or loss made from an investment. Essentially, it's the money you end up with above and beyond what you initially put in. Now here's where it gets interesting. The potential return on an investment typically increases with the amount of risk involved. It's a bit like a seesaw. As the risk goes up, so does the potential return. This relationship is often referred to as the risk-return trade-off. But why is this? Simply put, investors require a higher return as compensation for taking on more risk. However, it's important to note that a higher risk doesn't guarantee a higher return. It just means there's a possibility of a higher return. This is the gamble you take when you invest. Think of it like a lottery ticket. Buying more tickets increases your chances of winning, but it doesn't guarantee a win. Now let's consider risk tolerance. This is a measure of your willingness to endure the potential losses in pursuit of potential gains. Some people are risk-averse, meaning they're more comfortable with safer investments, even if the returns are lower. Others are risk-tolerant, willing to take on more risk for the chance of a greater return. Understanding your own risk tolerance is key to making suitable investment decisions. In essence, the relationship between risk and return is a balancing act. You have to weigh the potential rewards against the potential losses. It's not about avoiding risk altogether, but rather managing it effectively. Understanding risk and return is crucial in making sound investment decisions. It's about knowing how much risk you're comfortable with and finding the investments that align with that level of risk. So the next time you're considering an investment, remember the seesaw of risk and return. What if I told you your money can multiply itself? That's right, it's not a magic trick or a get-rich-quick scheme, but a fundamental concept in finance known as compound interest. Now let's start at the very beginning. We all know what interest is. It's the cost of borrowing money or the return on lending it. Simple interest is calculated only on the initial amount or principal that you deposit or borrow. But then, there's compound interest, the superhero of the finance world. Compound interest is calculated on the initial principal and also on the accumulated interest of previous periods. Imagine a snowball rolling down a hill. As it rolls, it gathers more snow, growing larger and faster. That's compound interest for you. To illustrate, let's say you invest $100 at an annual interest rate of 5%, compounded annually. At the end of the first year, you'll have $105. Now, in the second year, the interest is calculated not just on your initial $100, but on the full $105. So, at the end of the second year, you'll have $110.25. And this process continues year after year. Over a long period, the power of compound interest becomes more evident. It's like a financial snowball effect. The longer your money is invested, the more time it has to grow. That's why financial advisors often stress the importance of starting to save and invest early. So, whether you're saving for a house, planning for retirement, or just want to grow your wealth, understanding and utilizing the power of compound interest can make a significant difference. Remember, it's not just about how much money you start with, but how long you let it grow. It's about time and patience. It's about understanding that the earlier you start, the more you can take advantage of the magical power of compounding. Compound interest is a powerful tool in the world of finance. It's the secret to growing wealth over time. Finance may seem complex, but when broken down, it's a tool we can all use to our advantage. We've navigated through the vast ocean of finance today, breaking down its complexities into digestible chunks. We started by understanding finance itself, a world that, while initially intimidating, becomes a powerful ally when understood. Then we dipped our toes into the concept of investment, a cornerstone of financial growth that, when leveraged properly, can turn a modest sum into a fortune. We also explored the fine balance between risk and return, a fundamental concept that underscores the importance of informed decision-making. It's about finding that sweet spot between potential gains and acceptable losses, a balancing act that becomes less daunting with knowledge and experience. And let's not forget the power of compound interest, the magic formula that truly sets the snowball in motion. This powerful concept, often overlooked, can exponentially grow wealth over time, turning small, consistent investments into a substantial nest egg. The takeaway here is simple, yet profound. Understanding these fundamental financial concepts is essential for both personal and business growth. It's not just about making money, it's about making your money work for you, growing and multiplying and ultimately contributing to your financial freedom. So don't shy away from the world of finance. Embrace it, understand it, and use it to your advantage. Because as we've seen today, the potential is immense. Remember, the world of finance is at your fingertips. Make it work for you.